You know, listen, you can look at your chart and look at a chart of Bob on your screen right there, whatever stock you like. In China, they are, even with the recent moves, they're like on a flat line low compared to where they have been in the past. And you're sitting there with single multiple PEs with double-digit growth rates for the big stocks that trade over here. That's kind of versus what, you're 20 plus on the S&P.
Right.
Okay, and then you have, so the question was China going to do the things that you want them to do? Okay, are they going to do the easing measures that you want them to do? So, yeah, they came the other day, and what's his name? Pan Gongcheng, and I apologize because I can't even speak English well. You know, he came out, and he was like jovial. It's like, whoa. Jovial, saying we're going to cut, and we'll give you more. And he said, we'll do more and more if needed. Now, the Chinese to say we'll do more and more if needed, they don't say that because it's not been healthy to say those sort of things in China. But they said that the other night, and I've listened very carefully what government officials say. So I took it that they did a lot. They exceeded expectations, and they promised to do more and more and more. Okay? And that's very strange language, especially for any central banker, but especially over there. So that was the first thing that happened. And last night, we heard that they were going to have some kind of meeting, but they kind of blew away expectations on the physical stimulus, that they were going to do. Now, physical stimulus, if you look at your charts, if you like charts, because you used to be a broker, and that was a good way to do things fast, what can happen around the world when they do that? That's what you have to ask yourself now. So now you have the Fed. So just to backdrop again, the Fed's easing. You have a few more easings coming. The Japanese, they don't know what they want to do right now, but it doesn't matter what people think. They're going to be forced into things, and I can talk about that in a second. The Europeans are lowering rates, and now the Chinese are lowering rates, okay? And they're aggressive in how they're going to do it, and they're also, believe this or not, swap facilities to buy stocks, encouraging buyback of stocks, encouraging buybacks of stocks. Okay, this is China, all right? This is stock buybacks, not only encouraging it, lending you money to do it. And they're giving money like TELF money where you can put money out and you have no losses if you want to do it. You know how that thing works? You have only the money you put up and you don't lose money. That's a great deal for me. I want to be over there and borrow for some of this stuff. So,
what about the relationship between the United States and China? How the Chinese government may or may not feel about American investors, but maybe more importantly, how the American government feels about U.S. investors investing in China, too. What's the risk? How do you, hedge that
would be a risk, and that's why you have limits on how much you would invest. However,
you just said you don't have those
the other thing I thought you were going to ask is about tariffs and stuff like that. I do not care.
Yeah.
This is internal stimulus. In the fiscal stimulus they did last night, they're going to encourage consumption, directly saying it. So they're really doing all the things that people have asked them to do over these years. So what will happen on world markets? So now you want to talk with the United States. Most of your viewers are here in the United States.
Or Europe or Japan.
Oh, Europe or Japan.
You started on Japan.
Okay, so we can go around the world. Obviously, this is incredibly good for very undervalued Chinese equities, okay? Especially when the government's encouraging
the buybacks.
Buybacks, and for you to take risk to buy stock. Right. Take a loan out, buy stock, you can't lose money on your loan. Great deal for me. I would, if you want to be Chinese, is Sorkin a Chinese name? No, okay, so sorry. Anyway, sorry. So you have, so United States, so you have this world, and so I'm trying to figure the United States, so it's not really your first plot to go to invest right now, because you would say China first, Asia second, right? Mm-hmm. Asia at large second.
Okay.
Japan, then Japan, Korea, those markets. Also, actually, Asia and Europe before Japan, and I will tell you why. The problem with, you have to be careful a little bit about Japan, although I think it's still you want to be in the equity markets. If you look what happens, if China runs and they get the economy going and you get the animal spirits going, what happens? Chinese throw a lot of money in their economy. Who's one of the biggest beneficiaries in their own economy? Is Japan. And Japan, if they start running faster, I don't care what this election is, and they're worried about this candidate and that candidate. Some candidates might want to go to Abenomics, and I don't care. They don't even understand it yet. This just happened last night. The market doesn't understand it yet. What's going to happen? Japan's going to run too fast if they really stimulate there. And when Japan runs too fast, they're going to have to raise rates. And when they raise rates, the yen's going to appreciate. And if the yen appreciates, then you have to be careful about the stock market, not the stock, depending how it goes. Now, the stock market in yen terms, you should still make money, but how much does it move or not because of how it historically does, right? So you go around the world. The U.S., listen, the problem with the U.S., and then I could go European. The European index at 14 times multiple versus a 22, historically incredibly wide.
22 here.
21, 22, whatever you want to say for
14,
next year.
So Europe looks good.
Yeah, it looks interesting.
We're like last in Europe.
Well, Japan has the same sort of multiple right now, and you can
Okay.
say we have much better stocks and much bigger tech stocks and that. So the question here, where you don't have necessarily a cheap market, right? It's not a cheap market. It probably is, you know, and I didn't listen to him. I listened a little bit, but what Cooperman said yesterday. But if you looked at it historically, it's a little, you know, a little overvalued. Okay, I would say that. However, I get concerned about one thing, because fortunately or unfortunately, I was around in the 90s. I was around in the 80s too, but I was around in the 90s. And in that market where the Fed, cut rates into Y2K, in a good economy,
Right.
a relatively not a bad economy, but a relatively okay economy, you had those rich in before long-term credit. Rich in 97, relatively rich. Richer after long-term credit, and bubble mania in 99, early 2000. So I don't love. I'm a value guy. I don't love the U.S. markets on a value standpoint, but I sure as heck won't be short.
Well,
Because I would be nervous as heck about the setup
Right.
with easy money everywhere, a relatively good economy, and China just massive stimulus coming in. So it would make me nervous not to be somewhat long the U.S. Now, so that's how the setup is. So you can't be short the U.S.
Right.
You can't be short anything in Asia.
Right.
Anything
Nothing.
in Asia. Nothing.
Okay.